but you really need, especially your first couple of projects, to have boots on the ground and make sure you're there, watching what's going on, getting involved. It's just super important. It's the only way to protect your money.
Hello, and welcome back to the Very Real Estate Effect podcast, a show dedicated to real estate investing right here in Quebec, in Canada, and really just everywhere in the world, as long as the numbers make sense. Today, I'd like to welcome Marc Ramsay to the show. Hi, Marc. How are you doing?
Hey, good morning, Axel. Doing wonderful here in beautiful Costa Rica.
Yeah, I was going to say, we can see from your background. I can't wait to hear from it and understand how in the world you got there. Before we do, thank you for everyone to listen for listening. Please share this episode with a friend who could benefit from this conversation. Marc has a lot of experience in out of Canada investing. If you or friends around you are interested in this, please, again, share this episode. Send us some questions, leave us some comments, and I try to address absolutely everything we get. So here we go. Marc, you started in Canada and you ended up doing a whole bunch of things in a whole bunch of different places. But first of all, how in the world did you start getting involved in real estate investing?
My wife was looking through the paper one day when we were in Vancouver, and I was been doing IT work for a lot of years, and I was looking for a way to gradually get out of doing the IT work. And there was a advertisement for a company called MMG, or Millionaire Mentor Group, who was putting on a free 2-hour seminar in Vancouver about investing in the USA. So I said, hey, what can it hurt? Head out on a Sunday afternoon and check it out. And I was totally impressed with the knowledge of the instructors they had there, and figured, hey, they're offering a 3-day kind of boot camp in Vancouver, get a whole bunch more information, learn a bit more. And so I did that. And from the 3-day boot camp, of course, there's always the upsell on these things.
Of course.
And I headed down to Florida for a 5-day boot camp with them in the Orlando area.
Okay.
And which was really good because we had people from all different aspects of the real estate investment scheme. We had lawyers in there to deal with both transactions, corporations, anything, the legal aspects of investing in the U.S. We had a couple of brokers down there, we did 2 days out on a bus looking at all these different types of properties, which was great. Of course, we had a bunch of their mentors who were there talking about all their experiences with both doing just single family buys and rentals, fix and flips, multifamily, commercial. They kind of covered all the different aspects of it. So that was really great. Mm-hmm. And then from there, I actually did a private mentorship with one of their best guys. And I spent 3 days in Las Vegas, and we looked at 65 houses in 3 days.
Oof.
And learning how to evaluate them. And I went from 45 minutes looking at the first house we looked at down to we were under 10 minutes a house. Oh, yeah. Probably about 7 or 8 minutes per house after that, by the time we got through with them, just because you learn the evaluation process really quickly, and you start figuring out what costs are and all that kind of thing. And then you figure out what you wanted to do, maybe make offers on after that point. We made a few offers on places. Unfortunately, they didn't get accepted. But it got me into the whole U.S. real estate thing, and still had a lot to learn, but at least I had a good foundation for what I was doing. From them, I bought a fix and flip. It was a little townhouse north of Orlando. We went in, did some renovations and stuff. We got the house. It was a bank short sale for $27,000, if you can believe it.
Oh, wow.
We spent about $5,000 on it and sold it for $45,000. So that was my first profit in U.S. real estate. We bought a house for about $65,000. We spent $25,000 on it. That included new roof, all new painting, new flooring, replaced an AC unit, did a whole bunch of stuff on it. We sold that for $125,000. So that was our second successful investment down there. Mm-hmm. And then we did, I had a short sale with a lender down there, with a broker down there. She had sat on the short sale until it was ready to transfer. And I picked it up for $101,000 and promptly sold it 6 weeks later for $120 some odd thousand. And I had almost no investment in the deal. So nice. That was kind of how I got started with that side of it. Then I met up with a gentleman down there. We started looking at multifamily, and we got into, I'm going to call this quote unquote deal in Cleveland, Ohio, mm-hmm. which turned out to be a huge learning experience. And I kind of regret in some ways I regret jumping into that deal. In other ways, I'm glad I jumped into that deal because the amount of things I learned was incredible.
There's so much to unpack in there.
I lost like $150,000 on that deal in the end. However,
how big was the property?
It was 3 apartment buildings within one city block in East Cleveland, Ohio.
For a total of how many units?
44.
Okay.
So it was on the border of Cleveland Heights. So it was actually getting into a better neighborhood, but it was it was one of the worst suburbs in Cleveland to deal with at the time. But the problem is that my partner on the deal, or the person who helped me get into this deal, grossly underestimated the repair costs. And once I got into this thing and repaired a couple of roofs and started doing the clean out and all that kind of stuff on the buildings, we realized that there's no way I was going to be able to afford to renovate these buildings. So we sold it for what we could get for it. But in that meantime, I'd also flipped 2 other apartment buildings in East Cleveland, made profits on both of those from what I'd learned on the first one. And then I bought a 76 unit in Cleveland, which was actually in Cleveland proper. Okay. And I bought that in 2012, and I still own it to this day. I was really into the value add, like finding buildings that that were really inexpensive, really like 5,000 to 8,000 per unit type of thing, maybe 10,000 a door, that had a whole lot of upside, but they needed some work. Yeah. So this 76 unit building had 3 occupied buildings that needed some rehab to get all the units online, and it had 2 derelict buildings as well. Okay. So we went in, we renovated the front 3 buildings, got them fully occupied, got the bank happy with us, went and borrowed some money to gut and renovate the back 2 buildings, which were 32 units in total. And we spent about 3 years redoing those buildings, and now they look brand new. So we've got this beautiful 76 unit property that cost us $500,000. We've put about $2.5 million into it over the years, and we have a mortgage with the bank for about $3 million. But the property is worth about $6 million now. So
wait, just to unpack, because you already gave us a lot here. I want to go back to that first building that you said you bought in Cleveland, where it was a huge learning experience. Some mistakes, and either we succeed or we get a good lesson. At least that's my motto. So going back to that, because I think people who are listening would get a lot of value out of what is it that you learned? What mistakes did you make? You mentioned that the partner locally, it was grossly underestimated how much work and I guess the budget it would take to fully get those units to standard. What else went wrong, and what would you do differently about it now?
I would have done a little bit more research, for instance, on the city that we were working with, because it turns out that East Cleveland City Hall was extremely difficult to deal with at the time. There was allegations of corruption there. We had issues with the property, with the city inspectors. They did things that just made no sense. We actually had to take them to court at one point, and luckily we won. So a lot of more due diligence on the region or the place that I'm going to be investing in. Because there's lots of great places around Cleveland to invest, but there's also a lot of that are very difficult to invest in. And so by doing that research, you can kind of get the heads up before you start making offers in certain areas. I was a bit of a newbie. I didn't have a firm grasp, like I said, on the actual renovation costs or rehab costs at the time. I was still, I'd only done a few houses.
Was this done by someone locally? You had a partner on site who was running the contractor?
No, I was actually spending a lot of time in Cleveland at that. So I was directly managing it. I didn't have a lot of faith in putting my money in with other people and having them control what was going on. So I believe one of the reasons I didn't lose more money on this was because I was spending time in Cleveland, hands-on, boots on the ground. And then that's going to be another one of the lessons as well, is that you really need, it's great. You can find some fabulous markets in the US or Mexico or Costa Rica or wherever you're going to be investing. But you really need, especially your first couple of projects, to have boots on the ground and make sure you're there, watching what's going on, getting involved. It's just super important. It's the only way to protect your money and to protect your asset. So that was probably one of the biggest lessons learned.
And then up to this point, so the first flips that you did on single families, and then you went at this multifamily. How did you fund it? Was it self-funded? Did you have some partners? How did it work?
The initial purchase was self-funded. I had some cash. It was a nice thing. It was the U.S. and Canadian dollars were pretty much at par at that time. So I took cash I had in Canada, moved it to the U.S., and then I had that available to do these investments with. So I was mostly self-funded at that point. Some subsequent deals I had down the road, I did have partners on those. So I had JV partners, that type of thing. I was always the hands-on guy. I was always the guy actually running the projects, and most of my partners were just, equity partners. So, and they were fine with that because they didn't want to spend the time or the energy. They just wanted to get the return. So it was fine by me.
Okay.
So yeah, and that's what happened with that project. I didn't have the cash, and I also didn't have the expertise at that time to bring in the type of equity partner that I would need to complete that project. So it was better for me to say, okay, I'm just going to cut my losses on this, get what I can for it, take it as a learning experience, and move on to the next projects. And the next projects all went very well because of the lessons learned with that one.
Out of that one. And sadly, that's the bottom line truth, is that the best way to learn is to actually get burnt. Put your hand in the fire, absolutely. Mismanage, be overconfident, not be present enough on the ground, underestimate the renovation budget, overestimate the rents and the overall revenue. I think we've all kind of made that mistake at some point. So then you said you cut your loss, you lost 150K, but it allowed you to learn and to rebound and get a bigger property in a better neighborhood.
Yes, that was correct. And we had another one in downtown Cleveland as well, which we bought off of, it was a short sale with the bank. It was a company that went, a nonprofit that went bust, and their building was up for sale for a really good price. So that was another turnaround. It was a gorgeous building. It just needed some TLC, and I brought two investment partners in on that. That allowed me to tackle a larger project because I didn't have the cash myself, which was great. And learned a lot about the legal side of it too, because every time you get these you start doing these contracts, of course you have all the legal work you have to do on it. Your partnership agreements and your shareholder agreements and all these things you need to do. And one of my partners at that time was fairly well off, and he had a very good lawyer. So even after I was in my third or fourth revision of my documentation for working with shareholders and partners and stuff, and then he handed it off to his lawyer, who was substantially above my pay grade, and even made it even better. So it's actually good to work with some experienced people now and again, because you can always learn, right?
Yes. And this is a great example. They always have something to learn. In this case, he improved your shareholder agreement?
Yeah, improved my shareholder agreement, improved my partnership agreement, made it safer for all of us, made everyone feel better about the agreement because everyone felt a little more protected, which was great. Yeah. And everybody felt that no one person was going to be able to cause a problem that was going to be detrimental to the other owners or partners.
Okay. And so this 76 unit, you said you still hold it today. Now it's been a couple of years. In the first place, how did you select the Cleveland market?
That was actually a bit of a fluke. The project that we lost money on was actually, like I said, it was an East Cleveland deal, and that was brought forth with a real estate investor that I was dealing with I met down in Florida at the time, and he was getting into the multifamily world, and I think it was a bit of a learning experience for him too. I ended up doing some more stuff with him after that for a little while, but then ended up breaking it off just because of some things that happened near the end. When things really started going bad, you start realizing, people's true colors really start to come out, and it's like, you know what? Yeah, I don't need this.
Yeah, no, thank you. So then after that, this was a successful project. And then where did you go? What does the rest of your real estate investing journey look like?
Like I said, we had another one in Cleveland, which we bought and sold in that time frame as well, which went really well, and my partners were really happy. And then one of those partners, we went on to do a small portfolio of houses and an apartment in Akron, Ohio. That was supposed to be a long-term buy and hold, but unfortunately, my business partner had some family issues that needed some equity, so we ended up selling that. We didn't make any money. We didn't lose any money. We earned some money along the way, but again, there's always learning experiences and all that. Again, it was a different city, different way to operate, different property manager. I learned a lot of things about what I do and don't like about property managers dealing with that project. I'd say if you want to take a takeaway from that, I will never ever allow the property manager to control the finances again, as far as especially when they get paid. So the reason my 76 unit's been so successful is because I've micromanaged the financials on it from day one. I
Yeah.
manage all the payments, all the invoices, make sure, only money that needs to be spent is getting spent and when it's spent. The property manager invoices me for
Mhm.
his invoice every month, and then and I review it and then I pay it. He isn't the first one getting paid.
No.
So that's one of the big things is not allowing the property manager to
And
have
you
full
probably
financial
structure
control.
it also in a way where he's not the one assigning work, because otherwise there's a huge incentive for them to, oh yeah, get a contractor, come and fix this and do that and get an electrician and stuff. And then all of a sudden
Yes.
you realize that your maintenance budget is tripled.
Yeah, and I have all the maintenance guys I use there are all people that I have found in all my trips to Cleveland, and they're people I've been using for years that I trust. And I can basically just give them a phone call and I say, okay, I got a call in. We need to have this done at the property. Please go get it done. And I also now, because the property has gotten up to 76 units, I actually have a full-time on-site maintenance guy now who's just awesome. And so he keeps things pretty dialed in for me. So
Yeah.
I can now spend less time in Cleveland because I've got someone I trust on the ground 5-6 days a week. So it's
And
great.
that's a huge gain. I bet when you were able to have this full-time person on site. I mean, we've kind of gone through both where we've managed our properties ourselves and then we gave it to a property management. And then sometimes it's an electrical or a plumbing thing and you can go and fix it for like $40. Whereas by the time they call in an electrician or a plumber and this and that, all of a sudden it's a $350 expense, which really
Yes.
was 20 minutes and a $20 part.
And I've cut back too because I no longer have to hire a landscape company. I no longer have to hire a snowplow company. I made sure he had the equipment he needed to do all that work himself, and he's there all week anyway. So why would I pay someone else to come in? He handles all the minor repairs, so I don't have to call my contractor. He handles all my when we do unit turns. He handles all the cleaning, the painting, a lot of the minor work.
Mhm.
So and he's on salary, so it's not like
Perfect.
I'm paying someone else to come in and do a lot of that work, which is great.
Yeah. Yeah, no, that's a really good setup, and it makes a huge difference for you also in terms of the mental load.
Yes.
That you don't have to check on everything, and that he's on it, and he's working on it 5 or 6 days a week, and no, it makes a big difference. Good. So then, where did you?
And Mondays we have a call on Mondays. Like I'm due to call him later this morning.
Mhm.
We'll sit down and go, okay, how was last week? Anything I need to know about? What's going on this week? And if I have stuff I know, I'll let him know so he can plan his week out. So that's that weekly touch base.
Yeah.
And I do the same thing with my property manager. I figure out when he's in the office because he's at the property 3 days a week for a few hours. So we have a weekly touch base as well. Like vacancies, who's coming, who's going, who's being evictions, whatever needs to be done. Do I need to get my contractor in to do something? So it's good to keep that constant flow of information back and forth with the people you work with.
Oh, for sure. And then, okay, so then after this deal, because now you're in Costa Rica, there's a beautiful jungle behind you.
Yes.
What happened? How'd you get there?
Well, Costa Rica was a move for us that we just we did live in Australia for 4 years, 98 to 02, my wife and I, and then we moved back to Vancouver with the understanding we'd probably only be there for 4 or 5 years, then we'd go find someplace else to live. And we made the mistake, and maybe not the mistake, who knows? But bought the house, got the dog, had the kid, and all of a sudden, 16 years, 17 years passes, and you're like, what happened?
You're still there.
What happened to that? We're going to go live somewhere else thing. And we just made the decision, actually just before COVID, we made the decision, because we came down to Costa Rica a couple of times, and we decided, we're going to move there. My daughter can go to school there. All my IT work is 100% remote. I can manage all my real estate from down there. And so we made the move, and unfortunately COVID kicked in. So instead of moving down there June of that year, we ended up coming down when Costa Rica opened the doors December 1st of that year. So you didn't need to have a COVID test to get in. We jumped on it. We just came down. So we've been living here for just over 3 years now. So
nice.
And it's worked out extremely well. Like I said, I can still manage all my IT work, which I'm like solely backing out of. I can manage all my real estate. And it's also given me the ability to be more hands-on with what I'm trying to do with real estate down here. So we have an Airbnb just up the coast, which we've had for a couple of years. It's extremely successful. We go up there for maintenance, a couple hours north. We go up there, do maintenance. We had a large development property in Playa Flamingo, but after 3 years of hammering the local water authority to get our water permit for our development and still not getting it, we decided to sell the property at a profit, put that money in, redevelop, use that money for other development work down the road. And then we also got into some pre-construction deals in Mexico, one of which yeah, we've had one now for a year and a half, and it's in Acapulco, Mexico, and it's slowly starting to pick up now. And we've got another pre-construction in Puerto Vallarta coming due in December of this year. So that'll be another Airbnb as well.
Okay. And so those properties you buy on plans, they'll be delivered a year from then, and all you need to do is the financing?
Yeah, and the nice thing is that I'm with an international buying club organization. So there's 5,000 or 6,000 members. And so we have the ability to go into and do some pretty unique deals with developers, because they can basically make 100 units available, and the buying group will buy them if they are in fact a good deal. Mm-hmm. So that's how I got both of the current Mexico units, was through this buying group, and we got in really early for a really good deal. And then I have the option of just selling it when it's finished and make a profit, or hold on to it as an Airbnb going down the road. But we're also now doing an exploratory trip to Spain and Portugal later this year. And we're going to be looking at some markets over that way, with the thought that things like the Portugal Golden Visa, where we can actually get residency in Portugal, and eventually get a European passport and have a second base. So, kind of go back between Portugal and Costa Rica.
Mm-hmm. Out of curiosity, what's the buying group that you mentioned?
It's an organization called RETA, RETA.
Okay.
A guy named Ronan McMahon out of Ireland. Yeah. So I'm not going to basically give him a shout out, because there's good. He's had good deals. He's had bad deals. They tend to really cherry coat everything, or sugarcoat everything. Mm-hmm. And I've gone in and done some due diligence on some of these deals that have come up, and a lot of them actually are good deals. But a bunch have come through over the years where it's like, not. So I stay on the program. I see what comes up. I see if something that really outstanding comes along. And like I said, he does have really good buying power, and he does come up with some really good deals. Now, again, like the deal in Acapulco, I'm going to clear at least $100,000 on that, on a small condo. The one in Puerto Vallarta, we're expecting to clear $250,000 to $300,000 on it when it's done. Mm-hmm. So, there are some good opportunities out there with that buying group. But as with any real estate, you need to do your own due diligence. You cannot rely on what somebody else is telling you. You need to
absolutely
investigate yourself.
And it's funny you mentioned him, because maybe 2-3 years ago, someone had sent me a deal that they were looking at in Panama, and they wanted to get in, and they kind of sent me the documentation, asked for some consulting in terms of like, hey, what do you think about this? And it seems fairly structured. I had a few questions in terms of, it's one thing to say that, is that the execution is somewhat different, and then it's for the long run. They wanted to keep one of those units for several years, but as you said, like any other group, no matter who it is, you need to do your own due diligence, and you better do it thoroughly, because it's easy to get riled up and like, oh, but everybody else is doing it. It doesn't mean it's a good deal.
Yeah, and these deals, like I said, they open them up, and literally it's really hard getting a call through, because there's so many people trying to get a hold of these deals. But that's still, it doesn't mean it's a good deal. And I think the Panama deal you're talking about, there's a couple that were down there a few years ago, and I'm pretty sure I know which ones you're talking about. And I didn't actually go for either one of those, just because after doing my own due diligence, I decided either they're too expensive, or the area wasn't developed enough yet. If I wanted to go for a really long-term hold on the one of the ones I was looking at, it would probably end up being quite nice and probably give me a good return. But I was thinking that the return time was going to be too long on that.
Yeah. And there's also a bit of, it's good to be part of a group like that, but then there's also a bit of a risk, is that all of a sudden, let's say they develop 150 units and then they all get sold, but then 50 or 75 people plan on selling it right back after one's delivered, then all of a sudden the market's still going to be flooded, and then you're competing one against the other.
And that's happening with our Acapulco, Mexico one right now, because we do have it listed for sale. Yeah. And there's about 15 out of 171 units in the property, about I think 15 or 20 of them are for sale right now. So it's a little bit of a saturation, but the return is still good. It's just going to take longer than hoped to actually unload it. That's the only issue.
Okay.
So like I said, anywhere outside of the US and Canada, it's very easy to buy. It's not easy to sell. Okay, so like I've had an Airbnb up the coast for sale for a good chunk of last year. It's had good viewings, lots of people going through it and stuff like that. It's not until now we've actually got someone fairly serious looking at it.
Mm-hmm.
And Akamal's been for sale for a year, and we've had maybe 3-4 showings in a year.
What do you think that's due to? And it's not just price.
I learned a lot last week. I had a call with a broker there who actually owns a unit and is living in the same building.
Mm-hmm.
And he's saying that the way that real estate in Mexico goes for selling is that if you're selling a property, you really have to offer a bonus to the buyer's agents to get them interested in showing your property. So if you've got a building like ours there that has 15 units available in it, if you're offering a bonus to the buyer's agent, then they're going to show your unit.
Mm-hmm.
They're not going to show the other units. And that was one of the mistakes we made. We had a different listing agent for the last year, and we're just changing the listing agent now. And we were never told about this. They never told us about this. But then it's like, oh, okay, well, that starts to make sense. And this guy's been very successful at selling units because he's got agents calling him all the time going, what's available? Because they know a lot of his units have the bonus. So there's a little selling trick in Mexico for you.
Very good. Incentives
all the way. Yeah. And what we did too was we bumped the price of the unit up 5% to cover the extra 3% we're going to pay the agent. So it's not actually coming out of my pocket, and we have a little bit of maneuvering room for taking a slightly lower offer and still not losing by offering the agent the bonus.
Mm-hmm. So. And that's really good to know. And it's some of those small specificities that unless you know how it works locally, I mean, you couldn't have adjusted. And so it's good that at least someone told me, and now you're able to be properly prepared for the market.
Yes, absolutely.
So it seems like you have a lot of different experiences and different asset classes and locations. Is it correct to say that, over the last 20 or 30 years, you've really been trying to supplement and eventually replace your IT work to get the freedom through real estate?
Yeah. So it's been 13 years since I took that first course with MMG. And that has been the whole goal. So the nice thing about this is that over the years, I managed to make a lot of contacts in the real estate field, especially in the international venue. So there have been a lot of opportunities coming up with some people that I trust and have a lot of experience with large developments in other places who I'm now working with to find out, where's my next, where am I going next? What am I doing next? I need to, it's like anything else. If I want to use my own money, I got to sell something to move forward and things like that. So, I've got things for sale. Once those things sell, then I'll be able to, get into new projects and stuff like that. But the international contacts for me have been invaluable. I've got good contacts in Mexico, in Costa Rica, in Portugal, and Spain. So a lot of places, even in Thailand now, I've got a good contact there, and we're looking at possibly a condo in Thailand. So it's just getting out there, talking to people, meeting people, getting into different groups, especially on the international scene, finding out who actually knows what they're doing, listening to them, learning. It's always just constantly getting that new information, learning, trying new things, but making sure you're educated before you dive in. So,
and that's the biggest key. And you said it right at the beginning, and that's how you started. You originally went to a seminar and then you coached. And then it's amazing to see how successful real estate investors are happy to pay to accelerate their learning.
Yeah. To go back to that first year, so my education cost me about $45,000. Okay. But in that first year, I made $65,000, and I made it without really any mistakes. So I didn't lose anything. I made money on all the deals I did in Florida. So that education paid for itself. And the big thing was it accelerated my investing. It accelerated my education. So it was definitely worth spending that money and getting the coaching and all that kind of stuff. So
yeah. And because with the podcast, I get a lot of people asking me, like, how do I get started? What should I do? It's like, before you buy your first triplex, go invest 5, 10, 15K in yourself. Learn how to do it. Tag along with someone who's done it before and who's further down the spiral, and so on and so forth. It's so important. And for me, if you're not willing to spend the first 10 or 15K on yourself, your vision isn't aligned.
No, it's not. And you and I had a conversation earlier regarding taxes and stuff like that. Where you invest, how you invest, what the tax implications of those investments are. Are you an active investor, a passive investor? Of course, there's huge tax implications for passive investors over active investors in Canada, quite as you know. So, also you need to educate yourself on on all that side of it. So you have realistic expectations, so that when you do these investments in these projects and stuff, that you know that, oh yeah, I'm going to make $40,000 on this deal. But if you're doing it passively and the government wants 60% of that, well, that kind of takes a lot of the air out of your sales. Mm-hmm. So yeah, make sure that, and that's one of the reasons why I'm not a resident. I'm a Canadian citizen, but I'm not a resident of Canada anymore. And I sold almost everything before I left Canada, and then started reinvesting in other places, because I didn't want that tie back to the overtaxed Canadian investor. Mm-hmm. So that's a different conversation altogether.
That's a whole other conversation. And just to finish, I was going to say, it's good that you had, in French, like la clairvoyance, the mindfulness to check on all this, because a lot of people say, oh yeah, I'm going to go buy a condo in Costa Rica and something in Spain. It's like, wait a second, as a Canadian taxpayer, here are your obligations. And a lot of people completely underestimate that part, and it comes back to bite most of their profit after. So kudos to you for planning it. And it always comes down to educate, learn, see how other people are doing. You're not the first one to do this. Just look at what other people have done and just kind of copy it.
Yes, absolutely. Yeah, look, it's always learning. If you want to exceed in anything, whether it's stock investing or real estate investing or whatever, it's education, and it's constant. It's like, because things change, right? Markets change, laws change, taxes change, interest rates change. Like all these different things that all affect your real estate investing. They're all constantly changing. If you're not kind of keeping an eye on all that and managing it, then it's going to come back and bite you.
Yeah. Marc, it's been a real pleasure. Thank you very much for joining today. Thank you for sharing your experience. One of the feedbacks that I get the most out of the podcast is always like, oh, where did you find these guests? You always have such interesting people with different background and experiences, because we kind of tend to get boxed in I look at my market, I look at my little asset class and stuff, but there's so much more around. And I'm glad you were on today, because you really have a particular experience and a lot more diverse than some of the people we've had. So thank you, Marc.
Well, thank you, Axel. It's been a pleasure being with you today. I hope at least somebody gets something out of our conversation today. That's the goal, right?
Oh yeah, and I did. And originally, and I'm proud to share this, is that I kind of started the podcast too, because I want to have interesting conversations. And I don't want to say I did it in a selfish way, because it's pushed me over the last 3 years to have these conversations that I probably wouldn't have. So I'm getting something out of it, and other people get to listen to it as well.
That's excellent. Thank you very much.
Thank you, Marc. To everybody listening, again, share this episode with a friend who could benefit from Marc's experience. And stay tuned. I'll talk to you next week. Thank you.
And Pura Vida.
Oh, yeah, Pura Vida. Marc, any last words of wisdom?
No, I think we extolled everything today already, so we're good.
All right, good. Thank you for listening. Talk to you next week. Ciao.